welcome, folks. And today's video is going to be about the best way to derive your daily bias using the previously candle highs and lows. And so I'll be showing you some examples in the chart. So all thanks to T Trades for showing me this next day trading model, and that's how I tend to derive my daily bias and also my draw on liquidity. And so here's how I'm gonna be doing this. So I'll first mark out my this in candlestick ranges which I marked out on this. So price definitely, if price tends to close with a wick below and the body inside the range, then I'll be looking forward for more downward moves. And in this case, I had to move, so marked out the upside, which is my next strong liquidity. And what the price do? Price took out the liquidity and also mark out that. So since price closed above that, I'll be looking for price to take out the liquidity below, which it did take, but close to it a strong bullish candle. Yeah, so I'm looking for price to take out the high, and which it did. So take out the next high, which it did. So I'll be expecting price to take out the next high, which it did. Don't I'll zoom this so you can understand more. Price takes out the next high again, which it did. Yeah. So zooming this in right now. Um Yeah, sorry, my screen gets shaky. So zooming this in now right now so you get to see them. You see how it works. The wicks tend to close. Once the wicks close above and the body close inside the range of the candle, I tend to go to the direction of the other candle. So just like how you've seen here, I'll make some more examples. Yeah, so you see I close, the wick closes above and the body closes inside, so I'll be targeting for the low, and which price took it out. Now closes above and below and the body inside the range, so I'll be targeting for the high, and sorry about that, targeting for the high, and I'm expecting price to take the high, but price failed to take the high, and now I'm going for the low, and price took out the low. So to show that price is fractal and change is gonna call, you can actually lose a setup. It's not really given. So I just marked out that low and price taking out that. Let's look for further examples. Um you can see from here price breaking below, and look forward to taking the next low of that candle, but price actually failed to take that and rallied up for the next UL. So those are the failure parts of this particular next day model, ultron liquidity getting. So you see that actually worked, and what the price to actually took out the drawn liquidity for that. And so basically you see some more examples. Yeah, so we have that to be targeting as well, which price they take out and all of that. So there's just many more examples, but I'll break them down. And so um let's quickly look at some examples, and I'll be taking this drawing off here. So just took everything off, and let's just mark out the current one and maybe one example. Yeah, so let's mark out this and also the high. So this is current price right now, the high. So what we taking looking for, we're looking for taking out previous day high, which was yesterday's high, which was Thursday. And so let's take a quick example on this. For this push that occurred, that's marking out our drawn liquidity for buy side since price closed with the body inside with a bullish candle outside that, and the wick was just outside. So zooming this in, you could barely see it. I'll draw our liquidity already. To that is our draw liquidity. Let me arrange it well and write buy side liquidity. Let me write buy side liquidity. So um buy side liquidity. Yeah, so yeah, buy side liquidity. It's right. I don't know why it's not showing. Maybe it's the network or so. So let's just see why it's not showing. All right, it should be showing now. All right, let me extend that so it becomes visible. And yeah, so it's visible right now. And so that's the thing, liquidity sweep for the thing low on the 1 day time frame. So what we're looking at, I think we scale down to a more smaller time frame. So scaling down below here to the 15 minutes time frame. You can see this sweeps and just messing here, you're gonna see an entry. All right, so we have our buy side liquidity in place, and that's another sweep on liquidity. And what did you see next? The market structure shift, yeah, to the upside. And after the market structure shift, another one occurred actually. Yeah, so you could actually be using any of the ones. So you can use any of them, either the one below, and I'll use my fib zone to check out the fib levels, all right, corresponding below equilibrium. I could choose to take an entry from here, from the fair value gap there, and choose my stop loss below the zone. Then choose to target the buy side liquidity, which we marked out from the high. So you see, basically from the 1 day time frame, we're bullish. So that's the bullish setup right now, and also for this setup for the other changing market shift structure. Sorry. So you're definitely gonna be seeing. So I think that's like kind of a glitch here. So sorry about that. And we target for the high. And you see that price actually took that and went smooth there. So that's just basically how it works. Not much. I would have loved to do an example, but for the sake of time, you watch me trade this way, easy and precise, not much work. So let's check out for today and see how today went. Yeah, so let me expand the chart so you get to see more details. 1 day time frame, sorry, 1 hour time frame. Yeah, so expanded the charts. You see that's the high drawn liquidity we're supposed to target for the day. And so you see there for the 1 day time frame, you see that that's the drawn liquidity you're supposed to target for today. That was Thursday's high, and today's Friday. So I think market is just trading within the range of today, of within the range of Thursday candle. And so that's just how it is. And so just looking for clear opportunities. So I'll just bring out my fib 2 to check out the equilibrium from the swing high of Thursday's candle and mark out my equilibrium. So that's my equilibrium. So anything below that, I'll be anticipating a buy. But let's see how Friday candle closes first. And so throwing liquidity sets, fib zone gives us of equilibrium for today. So let me just write that out. Equilibrium. Sorry, can't see that. I think it's just too small for you to see. But reading out that equilibrium I've written down there. And so on to the next. We're anticipating price to go below that, but only the candle of the day of the daily time frame for today shows us. And I'm actually anticipating that price is going to be trading within Thursday's high and low range, within Thursday's candle range. And so there'll be not be much setup for that. And so back to the 1 hour time frame, you can see this, and you see that we have some major liquidity pools. Yeah. So some major liquidity pools like the New York low for yesterday, um also the London low for yesterday. Yeah. So also we have Asian low for yesterday below our equilibrium. So that's more like more reason for it to go below that and to train within the range. So it's actually weekend, by the way. Today, after today, the forex market closes. So until Monday, but just see how it is. So that's it. Until next time, I will talk to you soon.